Hey, this is Brant from TradeGuild.net. It's the 14th of July. I'm just going to do a real quick video. I've only got one thing to pretty much say. I just want to cover one development, and I've been watching this market, looking for the message of the market, what's to be learned from the market, what does it have to say. It's just been real chaotic, and it seems like there's nothing to learn from it. And there's only one formation that really comes to mind when I look at this chaos and I look at the volume, and it's just kind of all over the place. And the only thing I can really think of is a broadening formation, and they're not that common. You don't see them that much, and especially at bottoms you don't see them that much. But lo and behold, looking at the Qs, and if you look at hourly chart, I'm going to pull one up right now, the Qs, there's a broadening formation taking hold here, and I'm just going to draw it out for you real quick. Grab a couple trend lines, and right over here just around 46, and it's a right angle, of course, and then I'm just going to kind of roughly draw in this. It's not perfect, but there you go. Broadening formation, and typically broadening formations have 5 points of contact. We're going to say you know, roughly we have 1 here, 2, and then 3, 4 over here, 5, and then you have your breakout point, which is over here. Ideally, this guy does not come down and break through. Ideally, it doesn't even come down and touch over here. It just starts moving up. Stocks and Commodities magazine had this to say about broadening formations, bottoms particularly. The broadening formation bottom may form less frequently than the top because the pattern reflects a market moved by an emotionally volatile public, perhaps reacting to rumors more than technical or fundamental reasoning. This occurs more often during manic tops found at the end of sustained bull moves rather than at the end of a bear market. Okay, so let's just jump real quick to the Dow Jones 30, right? I'm going to pull up a daily chart of the Dow Jones. Actually, let's look at a 2-day chart. I'm going to kind of zoom out here a little bit and just grab another trend line and just draw it in real quick. And I'm just going to read that one part again, that these broadening formations occur more often. They're found at the end of sustained bull moves at manic tops. Would we call this maybe a manic top at the end of a sustained bull move rather than a bottom? And would we call what has been going on lately perhaps an emotionally volatile public reacting to rumors more than technical or fundamental reasoning? I mean, all day that's all I've heard on CNBC about how lawyers want to go after shorts that are spreading rumors about banks and crashing markets and doing all kinds of stuff, rumor mongering. So I mean, this was just an unbelievable description of this pattern that has developed here. So back to this the Qs here in this broadening formation. I guess we'll know tomorrow or in the next day or so if we see a breakout here through 46. It's roughly a 2-point formation here, so we'd expect to see it move to about 48 if it did break out. But I want to pull up the QLD real quick because I'm getting a lot better 3C readings in the Pro shares than I am in the Qs themselves, in the ultras anyway. I mean, so anyway, let's look at some 3C charts real quick. Just going to go through. Here's a 30-minute chart real quick, and let me just zoom in a little bit. We can see some what looks like accumulation down here. A 15-minute chart real quick again. Accumulation, what appears to be happening down here at this bottom, again over in this area. One more here, it's a 15-minute, and let me zoom in on this a little bit. And here's how 3C pretty much works. You know, we'd expect, this is what I would call accumulation. We have two pretty much roughly equal lows but the indicator has moved to a higher low over here, so we see a rally off that. Over here we see a higher high over here. The indicator is making a lower high, so we see a pullback off that. We see a series of lower lows. The indicator is making higher lows, so we see a move off that. But if we look at the big picture, I mean the big picture, we're seeing a very big positive divergence here in the QLD, which is ProShares ultra long on the QQQ on the NASDAQ. One more. Let me just pull up another 15-minute here on a little faster. This has a little better resolution, this 3C on intraday charts. So again, we're seeing another formulation of this indicator, that positive divergence again there, the negative divergence again there, where it flopped around. But all in all, we're seeing this, very positive slope over here as the ETF itself has been making lower lows. So very positive there. Let's take a look now at the QID, which I have been saying is the great tell, the market's great tell. So the QID, and we're going to take a look at a 30-minute chart over here real quick. I don't know if I can back out a little bit. The QID was coming down out of a descending wedge, which would be a bullish formation for the QID, negative for the market. And remember, this is a 30-minute chart, so this is where the NASDAQ flopped over and fell down. So we see a very strong move up here, but if you can look just recently what's been going on, we see higher highs, and this indicator is just not making higher highs. You can see it's making lower highs, so that's not a very positive development for the QID on that time frame. And here's a 15-minute time frame, and you can see it just hasn't done anything. I mean, this is pure distribution, what it looks like to me. And you can see, despite the market being real nasty and horrible, this QID really hasn't done much here. Just not breaking through the 47 level. And this is just, it looks like pure profit taking. They're just getting, just getting out, taking the profits and leaving. There's no accumulation in this indicator anyway. On a 1-minute scale, just so we can see what's happened today, you can see, let's see what time this was. This is about 1:15. This rally attempt fell apart. Another rally attempt over here at about 3:15, again fell apart. So we'll take a look at a couple more, and then I'm going to sign off real quick. Here's a 60-minute. We're seeing the same deal, and again, here's that descending wedge, and again we see a very, very positive divergence here in the QID. You can see two roughly equal lows. Indicator was making lower highs, so that was a positive divergence. QID started moving up. We see roughly two equal highs, and now we see a negative divergence. So I expect to see the QID again moving down. And here's the 15-minute version. Again, we're seeing stuff that looks very nasty here. Zooming in a little bit on that 15-minute. And lastly, a little higher resolution here. Here's a 30-minute. We can see again these higher highs just falling apart on the higher highs, showing distribution. And lastly, a 15-minute of this scale looking real nasty, looking just like the sellers in the QID are very strong in this indicator anyway. So that's my case. If I'm wrong, then I'm wrong, and you have stops, and that's what stops are for. It's a hard case to make when the market is acting as bad as it's acting, to come out and say, I'm not a perma bull, by the way. I'm a short seller. I love being short. I can't wait to get back short in this market. Fair disclosure, I'm net long. I do have shorts. I'm short oil and oil services via DUG, and I'm short some stocks with puts. But ultimately, I trust my indicator, and it looks to me like we're getting ready to see a pretty good bounce. So visit the website. We have a lot of other charts up, and I've got some other videos posted up there. And you can take a look around and check out the indicators, check out telechart, check out blocks. And if you have any questions, I got my email up there. Shoot me an email. Thanks. Brant from TradeGuild.net.